Good morning and thanks for tuning in. You're watching All You Need to Know on Bloomberg Quint Live and I'm Alex Matthew. First, the headlines. Reserve Bank of India Governor Shaktikanta Das says that there is room for further rate cuts owing to a slowing growth environment and stable inflation. That's a Bloomberg exclusive. Yes Bank promoter Rana Kapoor sold 2.3% stake in the private sector lender in order to bring down debt taken on by his private business entities. Axis Bank has launched a QIP issue to raise funds. The base price has been fixed at 661.5 rupees per share. PSU Banks will be in focus in today's trade. The government has mandated them to not declare any stressed MSME account as non-performing till the 31st of March 2020. And Asian markets report moderate gains at the start of trade today. Volumes remain thin on the final trading day of the week. Let's talk about the US markets now. They ended almost unchanged on Friday, making it the second straight day of volatile moves. While stocks gave up losses on Wednesday post the Fed policy, they gave up early gains on Thursday after the S&P 500 neared a record high. Ranita Young of Bloomberg News wraps up Thursday's Wall Street action in this report.
U.S. markets ended mixed on Thursday as the S&P 500 climbed within 1% of a record high, all happening as investors digested more central bank decisions and saw some favorable comments come through on trade. Now, we did see quite a bit of companies news coming in, with U.S. Steel dropping more than 10% after the company said it expected a wider loss than originally anticipated, and earnings continued with Darden Restaurants, that's the owner of Olive Garden and Longhorn Steakhouse, seeing an earnings miss and shares dropping as a result of that. Next up will be Carnival Corp. Meanwhile, treasuries advanced during the session and oil gained as the Saudis scrambled to repair the supply chain after that weekend launch or that weekend attack on its oil refineries. And the OECD cut its world growth forecast to 2.9% from 3.2%. And that's a look at your Thursday Wall Street action. In New York, I'm Ranita Young for Bloomberg News.
Now, the foreign minister of Iran has warned of an all-out war if either the US or Saudi Arabia launch any military strike on Iran. Mohammad Javad Zarif told CNN that although Iran does not believe in any military confrontation, it will not hesitate to defend itself if the need arises. Jody Schneider of Bloomberg News gets you the latest in this update.
In that interview, he said that Iran was not behind this strike on the Saudi facilities. He said that, he put it in an interesting way. He said, referencing the Houthi rebels in Yemen, the Iran-backed Houthi rebels, he said they had claimed responsibility. He said he couldn't say for certain if they did it, but that they claimed responsibility and that he knew Iran did not do it. So that, of course, is very different than what the U.S. had said. The U.S. Mike Pompeo, the U.S. Secretary of State, said he had high confidence that Iran was behind the strike. And, of course, the Saudi officials with whom Mr. Pompeo met earlier this week have said that they think they're unquestionable that the Saudis were behind, the Iranians were behind this. But again, neither was saying that they actually launched the strike.
Yes, so Jody, what is the latest from what the US is saying, about the response, about the responsibility, and about what might happen next?
Yes, so Mike Pompeo, after he met with the Saudis, went to the United Arab Emirates, and he says from that meeting that he has collected some evidence and information that will help decide what response to make. But at the same time, President Trump has been talking about sanctions rather than any action. Initially, he had tough talk about being locked and loaded if necessary to respond, but he has lately been more talking about sanctions. His latest set of tweets about this was that there should be tougher sanctions on Iran and that the U.S. would be going that route. The U.S., of course, has heavily sanctioned Iran already, and these sanctions have, so the new sanctions would not seem to be having much more than a marginal effect, given how many sanctions there have already been put on the economy in Iran by the U.S.
All right, let's also take a look at the Asian markets now. I'm joined by Rosalind Chin of Bloomberg News. She's joining in from Hong Kong. Good morning, Rosalind. How's it looking this morning in Asia?
Largely positive across the Asia-Pacific at this moment in time. The MSCI Asia-Pacific making gains of 0.38%. The MSCI Asia-Pacific stripping out Japan also up about 1/5%. Now, we've just had some information out from China where the loan rate, the loan prime rate, the one-year rate, has been cut to 4.2% for the month of September versus 4.25% previously. Now, this was largely anticipated. There hasn't been any action of late from the PBOC. Investors have been looking for a little bit more to help support the economy. There's been more data out showing that China's economy is beginning to slow, is beginning to struggle a little bit under the weight of this trade war, the slowing global economy, of course, dragging as well. So this hasn't become as a huge surprise. Also, we've seen that China has been reluctant to cut loan rates in general. It's been very concerned about a property bubble, stoking that again, and also the leverage in the financial industry. These are the concerns around which it's very reluctant to actually cut rates, but it is actually tinkering around the edges, of course, with this loan prime rate, which got slightly cut today. Now, we seeing that the markets in China opened higher. The Shanghai Composite, though, is pretty much flat right now, and the CSI 300 index making gains of just 0.1%. Here in Hong Kong, the Hang Seng making gains of 0.28% at this moment in time. Moving over to have a quick look at Japan, because we had some data out there on CPI. Core consumer prices for the month of August rising 0.5%, in line with expectations. A tiny tick down from 0.6% in July. Now, that 2% target there for CPI for the BOJ is a long way off still. This seems really like a very long struggle for them to get there. BOJ did not make any changes to its policy yesterday at the end of its two-day meeting, but the focus now is on next month, October. The BOJ has ordered a review of the situation for next month, but of course that's largely because it's waiting to see what happens after the 1st of October when that sales tax hike comes in, but there is a possibility that they may take action at the next bank meeting. So that is something to be watching out for. In Tokyo, the Nikkei is up about 0.6%, and the Topix making gains of 0.5%. Over in Australia, the S&P ASX 200 up by 0.77%. Back to you.
Thanks so much for that, Rosalind. Well, trade talks between the US and China have resumed in Washington, paving the way for higher-level trade talks between the two countries early next month. However, there have been conflicting details coming from two White House officials ahead of the talks. Sarah McGregor of Bloomberg News tells you what this rhetoric is all about.
We've seen sort of both sides trying to appease people and say, you know, we're making some progress, we're still going after an ambitious deal, but at least we're still talking. Of course, we heard from, a sometimes Trump advisor, Michael Pillsbury, today, and he said, the tariffs, they could go up to 50, go up by 100%. Of course, both sides want as much leverage as possible right now. So it might be, posturing to say that there's a whole world of pain out there that the Trump administration could still level on China. I think what we do have to believe right now is that the two sides are trying to talk. I think neither one wants an escalation. U.S. companies are really talking about how much pain this has caused them. They're obviously having to pay these import tariffs as the goods come in. So I think, at this moment in time, we're led to believe that at least they're trying to make some progress, and they're not necessarily talking about an escalation.
What do we know about the scope of the deal? Because we have heard everything from a limited trade deal to a very comprehensive one.
Absolutely. So we reported a few days ago, of course, that the Trump administration might be, and Trump himself confirmed this, it might be possible that they'd agree to some sort of interim deal. Of course, they didn't give us officially details about that, but perhaps it could include things like agriculture purchases, get that trade deficit down that the Trump administration doesn't like, or other small things. But, we heard from Commerce Secretary Wilbur Ross today, and he said what we've heard time and again from the Trump administration, the number one goal is to address IP theft, the allegations of it, and to do some of these big-time reforms to China's economy that the U.S. believes makes an unfair playing field for its companies. So it's hard to imagine how the Trump administration could really champion an interim deal as a big win.
All right, let's now have a look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
Let's start with tensions, which are rising again in the Gulf. This with the U.S. agreeing that the attack on Aramco plants was, quote, unquestionably sponsored by Iran. Tehran, meanwhile, warned that any retaliatory strike by the U.S. or Saudi Arabia would be met by all-out war. President Trump ordered new sanctions on Iran, but remains non-committal about any military action. Secretary of State Mike Pompeo ended a short visit with talks in Abu Dhabi.
I think it's abundantly clear, and there is an enormous consensus in the region that we know precisely who conducted these attacks was Iran. I didn't hear anybody in the region who doubted that for a single moment.
To the latest on Brexit, now sterling surged to its highest in 2 months on reports the European Commission President Jean-Claude Juncker thinks a Brexit deal can be reached by the end of October. He told Sky News he's doing all he can to prevent what he called a catastrophic no-deal Brexit. Meanwhile, after 3 days of debate at the Supreme Court, Britain's top judges will rule next week on Prime Minister Boris Johnson's decision to suspend Parliament. And a new report from Amnesty International accuses the Hong Kong police of torture and of beating democracy protesters taken into custody. Amnesty says that officers used unnecessary and excessive force in making arrests, beat one person for refusing to answer questions, and threatened to electrocute a man who would not unlock his phone. Hong Kong police said it would not comment on individual cases. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's turn to the markets now. And Agam Vakil is here to tell you all about the day's trade and also what's happening in the futures and options space. Good morning, Agam. A lot of talk from the technical analysts over the last couple of weeks about major supports, but then those seem to have just blown past. How are we looking at the start of trade today?
Yeah, Alex, it's been a tough trade, tough market to trade. That certainly is the case, considering we saw the kind of weakness that we seen yesterday. Something that wasn't entirely expected, but for now we are looking at a likely recovery, at least based on the SGX Nifty futures and its indications. But as I was talking about yesterday, we did see that cut of around 1.3% on the indices. Well, mid-cap and small-cap indices declining and actually underperforming and falling even further as far as the banking indices are concerned. Again, we're keeping an eye on the PSU index specifically, because that was down around 2.3%. Well, moving on, let's take a look at all that we've seen as far as your ADRs are concerned. It's a mixed picture, as has been the case over the past couple of days. Tata Motors advancing by around 1.5%. On the other hand, Vedanta and ICICI declining by anywhere between 1.5% to 2%. It's largely the same in the other stocks as well. Let's move on and talk about your fund flows, and that's the number that we want to keep an eye on, the fund flows. So we once again have a number which is not unlike what we saw day before. Well, roughly 900 crores moving out of from the FIS table. On the other hand, DI is buying stock worth around 646 odd crores. Do remember the turnovers weren't extremely high, as far as cash is concerned, and this was an expected number here coming through. Well, but what about your contributors? So while we did see significant weakness coming in from Reliance Industries and ICICI Bank bearing down on the indices, there was broad-based selling. We hardly had any gainers in yesterday's day of trade. Moving on to your futures and options space. Well, we did see fresh shorts being taken coming through on the Nifty futures. The open interest increased by around 3%. The Nifty banking futures saw an increase of as much as 1% in open interest. And well, coming down to your options data, we're keeping an eye on 11,000 now, where the open interest has shifted from 11,200 to 11,000. There is a lot more writing around that level, as you can see the call. But as far as yesterday's day trade is concerned, once again we saw a lot of writing, surprisingly, around the the 10,700 call as well. Of course, 10,800 call in the writing around there was expected because we saw the Nifty come off. Well, we'll keep an eye on these levels because they certainly will be very important ones to watch. You never know, we may actually see some writing in the 10,700 put. But let's wait and watch as to how we start seeing the opening. Moving on, we have the VIX, which rose by only 1.3%. Well, there are all sorts of guesses that while the Nifty has fallen quite substantially, the VIX hasn't really risen up. Of course, one theory here is the fact that, well, it all gets spread out across the various weekly options now that they are in play, which is why we haven't really seen that substantial rise as far as the VIX is concerned, and hence not seen a substantial, well, increase in premiums. But of course, the Nifty put call ratio, well, largely around the same level at around 1.03, despite the fact that we actually saw the indices come off quite significantly. Well, in terms of stocks, we're keeping an eye on HDFC Bank, Yes Bank, ICICI Bank, Z Entertainment. Of course, Z Entertainment and Yes Bank stand out in this case because there were significant shorts into the system. And of course, in terms of unwinding, watching out for something like an NIT Tech, Arvind, and Ramco Cement. So, well, it was a tough day of trade to, well, you know, maneuver around, Alex. But let's wait and watch whether or not there is some recovery today.
All right. Thanks so much for that, Agam.
Yeah.
Now, the government has a limited fiscal space, according to RBI Governor Shaktikanta Das. He was speaking at Bloomberg India Economic Forum yesterday, and he said that it's up to the government to front-load its spending and also prompt central government PSUs to fast-track spending to boost growth. Listen in.
Fiscal space itself is quite limited. Now, the fiscal deficit is at 3.3. Then there has been a lot of discussion in the public space, in media, about the public sector borrowing by the government. So therefore, both put together, I think if you look at it, there is already, you know, there is a very little space so far as the fiscal is concerned. But what is the internal position in governments with regard to the tax collections, how much expenditure is likely to really materialize, that is something on which government has to take a view. And if in the assessment of government they feel that a counter-cyclical you know, fiscal expansion is required, it's for government to decide. But at the moment, as I would see, there is little, you know, there is little space for any fiscal expansion. So therefore, as I have said, you know, now a little while ago and earlier, I think it is very important to do this kind of changes, you know, this kind of policy changes, focusing on improving the ease of doing business, focusing on certain structural reforms. I think it's very important to focus on these areas, and the huge amount of resources which are provided in the budget, it's very important to see that they are spent fruitfully. And for example, the capital expenditure can be front-loaded, and I think the government is already focusing on that. So the current capital expenditure program in the budget and by the central public sector undertakings, they can be front-loaded, and they can be sort of, it can result in faster execution. The various provisions under the budget, let's say under the PM Kisan and other things, that also, you know, the flow, I think it is happening. I don't have the latest numbers, but that also should keep happening. So therefore, government expenditure, the total expenditure budget is itself quite large. The Government of India has a large capital budget, but most of Government of India's capital budget actually happens outside the budget, because Government of India capital budget is not, you know, is truly reflected more by the capital expenditure program of the central public sector enterprises. So when I say capital expenditure needs to be front-loaded and should be speeded up, it's both government as well as the central public sector enterprises.
After the meet with PSU bank heads yesterday, the finance minister last evening announced that stressed MSMEs will not be declared NPAs till the 31st of March next year, and pushed bankers to find 5 new creditors for each existing customer in a bid to extend the reach of credit to people.
For every one old customer who wants credit, I've said 5 new will be brought. That's the thumb rule we've offered. That for every one customer who wants a loan, please give him. Please give him. But for every one who you give now, you will bring 5 newer ones, fresh. Somebody who's never taken loan from that bank should be brought in and given for the category in which he wants. Vehicle loan, farmer, or housing, or he may belong to a FPO, anything. So we do not want recycling alone. We also want recycling. Old customers can also get it, but newer ones will also have to be brought in. There exists a provision given by the Reserve Bank of India to ensure that MSMEs, if they are stressed assets, they may be SMA1 or they may be SMA2. The Reserve Bank's existing provision itself empowers the banks to not declare them NPA even after the 90 days. So if they are a stressed asset MSME, the bank has enough powers given by the Reserve Bank to not declare him NPA, and if possible, work it out with him to restructure his loan so that he can get out of the difficult situation. From our discussion with the banks, it looked that that order may exist, but many of them had not availed of it. So very clearly, we've told them, invoking that RBI issued guidelines till March 31st, 2020, no stressed asset MSME will be declared an NPA.
On to the top corporate news. Morgan Credits, a company owned by Yes Bank co-founder Rana Kapoor's family, has sold little more than 2% stake in the bank. The funds will be used to repay Morgan Credit's debt. Advait Palepu has the details.
In a bid to reduce its debt, Morgan Credits has sold its 2.3% stake in Yes Bank for around 337 crores. Morgan Credits is owned and operated by Rana Kapoor, the promoter of Yes Bank, and his family. The company had a 3% stake in Yes Bank, and since the stake sale, its stake in Yes Bank has reduced to 0.7%. In total, Rana Kapoor's family now owns around 7.4% stake in Yes Bank. Now, the money was raised essentially to repay NCDs that Morgan Credits had borrowed from Reliance Nippon Asset Management Company. Around 722 crores of this NCDs had been repaid so far, and the remaining amount will be repaid before the due date of April 2021. As a result of a qualified institutional placement last month, Yes Bank raised around 1,930 crores. In total, this has brought down the promoter and promoter group entity holding in the bank to about 15.7% from 18% earlier.
Now, the GST Council meets in Goa today. The meeting, which will be chaired by the Union Finance Minister, takes place at a time when the auto industry is demanding a rate cut. But the Council may not necessarily oblige. Nikunj Ori explains why.
The GST Council in its meeting is going to discuss a whole lot of issues ranging from GST rate reduction on various items to putting in place a system to keep a check on tax evasion. The Fitment Committee that comprises of officers from both state and central government have opined against any rate cuts for the auto sector and the biscuit manufacturers, citing higher revenue implications for the government. The Fitment Committee has said that the GST cannot be reduced from 28% to 18% for the auto sector, since this would involve revenue implication of about 50,000 crore for the government at a time when GST revenues are already declining. However, there's one proposal on the table where there could be some relief for the hotel sector, as the GST Council will discuss lowering GST on hotel tariffs above 7,500 to 18% from the current 28% tax bracket. The other proposal on the table is to increase this threshold of 7,500 to 10,000 and levy GST of 28% on hotel tariff above rupees 10,000 rupees. The other proposal on the table is to put in place a system that will keep a check on evasion, as the government has found out that currently there's a rampant misuse of input tax credit, and new firms are floated by businesses just so that they can avail higher input tax credit. So the system will put in some risk parameters, and risk profiling would be done for businesses, especially the new ones. And once there's some certain risk flagged against a new taxpayer, there'll be some restrictions put on the input tax credit that a particular taxpayer can avail, and there'll be a threshold which will be decided by the council, above which a taxpayer will not be able to avail input tax credit. Over to you.
Now, wages in India saw only modest growth in the financial year ending March 2018. The latest data released by the annual survey of industries has pointed to this, and this comes at a time when a larger chunk of the population made its way into the organized workforce. Pallavi Nahata has the details.
The annual survey of industries for FY18 suggests that employment and wages have been under pressure for some time now. The survey was released on Wednesday and suggests that per capita wage growth across India's organized industrial sector moderated to 6% in FY18 from 6.21% in FY17. Wage growth has fallen for the fifth year and is well below the peak of 15.13% in FY13. While wage growth fell, the number of workers employed across these units rose at the fastest pace since FY11. Worker strength rose by 4.8% in FY18 to 1.22 crores from 1.16 crores in FY17. The pickup in employment growth between FY17 and FY18 was very modest. The top 5 most employment-intensive industries in FY18 accounted for nearly 45% of all industrial jobs. These industries were textiles, wearing apparels, food products, non-metallic mineral products, and basic metals. However, employment trends across these industries presents a mixed picture. While some industries like the apparel industry saw growth moderate consistently over the past 3 years, those such as basic metals have seen a revival in growth.
All right, now let's have a look at the stocks that you have to watch out for in trade today. Somit Sarkar is joining me now to tell you all about the stocks in news. Good morning, Somit. What's on your list today?
Good morning, Alex. And stocks in news first, let's start off with Axis Bank because the bank has launched its QIP and the base price fixed for this QIP is 661.5 rupees. Also, they can offer a discount of nearly 5% on the same base price of 661.5. And Bloomberg has reported that the bank is looking to raise as much as $1.4 billion from this QIP, and the indicative price for this QIP has been fixed at around 629 rupees, which is a discount of nearly 5% to yesterday's closing. And they have also kept a green shoe option if the demand is strong for the shares of Axis Bank, then they could raise additional $351 million. Reliance Home Finance would also remain in focus because Brickwork Ratings has downgraded companies rating to default, and that is on the back of non-payment of the commercial papers that the company had. NMDC would also remain in focus because they have cut the prices for iron ore for the second straight month, and for the month of September they have cut it by around 200 rupees for a lump ore to close to 2,416, and for fines at around 2,700 rupees. But it's a cut for the second straight month, and for this month it's a cut of nearly 200 rupees. Oberoi Realty would also remain in focus because the company has clarified that the media article on the company that says that the IT department has unearthed some cash transactions in Oberoi Realty which had appeared in Money Control is factually incorrect and false. The company is also saying that they did not have any cash dealings with any of their clients in the past. And key bundles, IIFL Wealth Management, which listed yesterday, would remain in focus today as well because Small Cap World Fund has acquired nearly 13.8 lakh shares in the company at around 1,267. In other news, IIFL Securities will be listing on bourses today, so that will be one stock that we need to keep an eye out for. Along with that, ITC will also remain in focus because there's a critical GST meeting today, and there could be a possibility of a hike in tobacco tax. That's what CLSA was suggesting, so this stock would also remain in focus today.
Thanks so much for that, Somit. Now, with A lot of talk recently about electric vehicles and the move to eco-friendly mobility. There's a lot of options out there, but have you heard of a bubble-shaped water taxi? Well, it was launched in Paris, and apparently there's no noise, there's no waves, and there's no pollution. Take a look.
The main importance for us is no noise, no waves, and no pollution, and bring them into cities that are congested, problems with mobility and so forth, because today the freedom of mobility is lost. So we're trying to add a potential system that you actually can use with an app on your phone. Not only be fun to use, but makes economic sense. If you compare a similar sized boat with an outboard engine, you're going to run 30, 40, 50 euros an hour in fuel cost, whereas this one costs you $3 or €3.
All right, well, that's all you need to know going to trade today, but do stay tuned. There's a lot more coming up in just a short while. This is Bloomberg Quint.